Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, entrepreneurs, executives, thought leaders, artists, you name it, all over the world in crypto and blockchain. And I have an amazing guest for you today. I always have amazing guests. I'm very fortunate that way. Today, he is the CEO of SummerFi. His name is Chris Bradbury. Chris, welcome.
Hi. Yeah, thanks. Thanks for having me.
You're very welcome. Very welcome. So let's kick things off and ask you a first question is this, what is your background and is it a logical background for what you're doing now?
Yeah, sure. So I would like to think so. I've been a product manager for probably almost 8 years now. Before crypto, I was product manager in fintech, kind of in startup and growth companies. I did a little bit like software engineer for a little bit, but I like to think I'm a much better product manager from that point of view. And yeah, kind of the fintech track took me into crypto in 2018. I joined MakerDAO as one of their first product managers in kind of mid 2018. And yeah, always kind of been focused on the kind of product management space for like user interfaces, the kind of consumer driven apps, and so on. And yeah, kind of product manager all the way through the Maker Foundation until the foundation dissolved in 21. And we took what was Oasis.app at the time, originally the front end interface for the MakerDAO protocol. In June 21, we took that into a separate kind of external company. I was product lead for it in the foundation, so I kind of just naturally fell into the kind of CEO role for it here. And then yeah, that rebranded into SummerFi last summer, European summer. And yeah, takes us through today. So yeah, I think a logical background. I mean, I studied aerospace engineering, which is a tiny bit of a tangent back in university. But yeah, sat behind a desk instead of stood on an aeroplane somewhere. But other than that, fairly logical, I think.
Aerospace engineering is no easy field to study. So
No. Yeah, and I got a good friend who was at Maker with me as well, Kenton, who's kind of was doing sense until recently and so on as well. He was also a fellow aerospace engineer, so yeah, we always had the kind of like this little aerospace connection inside at Maker back in the day.
Got it. Yeah. So Maker's come under fire a little bit recently. Something like with Dai maybe losing its peg. I don't fully understand what's going on there. Maybe you could talk about that a little bit before we get into what SummerFi is all about.
Yeah, I mean, so like we do a lot more than Maker just now, but I mean, I don't think Dai is not losing its peg. I think the issue is the amount of Dai being pumped in against like kind of Athena collateral. So the kind of SUSD and USDE. I don't know what the numbers are at the moment, but I think it's scheduled to go up to about $1 billion. Basically of kind of effectively Dai backing that, or SUSDE and USDE backing Dai. And there's kind of a lot of different opinions on Twitter. Basically whether it's a good idea, whether it's a bad idea, kind of how it actually works, kind of what security Maker has in some ways against being able to like redeem the collateral for actual dollars to keep Dai backed. Yeah, and then you've kind of got the kind of almost a semi infighting in some ways between kind of like Aave and Maker. That's kind of half existed for a little while. Really. But yeah, and obviously then that SUSD and USD kind of stuff was kind of through Spark and Morpho as well. So it kind of created this kind of like three-way fight in some ways. Maker Spark and Morpho on one side, and Aave or Mark on the other side saying it's a bad idea. I mean, personally, I think it's a great idea with like this kind of similar-ish things done in the past as well. I think the comparisons to the kind of Luna Terra stuff are unfair on the USDT side of things. And yeah, I mean, it's a great product for the users that know what they're doing. We've put it on SummerFi, the kind of one-click yield loop as well. So you can kind of like between 5x and 10x it in one transaction, which has been super useful for our users in particular. And yeah, there's always a non-zero chance it can blow up, but in reality, I think it's closer to zero than what some people are making out on Twitter, at least.
you said the magic word early on. You said there are a lot of opinions on Twitter. There are a lot of opinions that are unqualified opinions. So let's talk about qualifications. You're qualified to run SummerFi, you know. So what's that all about? And why should DeFi advocates trust your platform?
Yeah. So SummerFi, yeah, we're one of the leading kind of service layer interfaces really into kind of what we like to think of like as a trusted layer of DeFi. So we only curate the kind of like the best protocols really. So you'll see there on there Maker, you'll see Spark, you'll see Arjna, you'll see Morpho, you'll see Aave. These are all protocols that everyone inside Summer uses themselves. Like you won't see protocols on Summer that we wouldn't use ourselves. Is kind of the first layer. So if we wouldn't use it, it won't be on Summer. That's the first thing. We've got over $5 billion, I think, or maybe just under the current market movements and so on, being managed through the SummerFi interface. So yeah, there's a lot of people that trust us with a lot of dollars in there. We're one of the oldest front end interfaces into DeFi in reality. So yeah, we like the Oasis app brand launched in 2019 with the launch of MCD, multi-collateral Dai. But in reality, yeah, the same team was responsible for the single collateral Dai portal going back to like 2018 and so on. But yeah, we've got some of the best automation tools available in DeFi, keeping a lot of people's vaults and stuff secure from that kind of trusted point of view. But most importantly, it's DeFi and it's entirely self-custody, like custodial. Only you who own the private key can touch your assets and so on. You're not trusting anyone else with them. Even the automation system is entirely self-custodial. You can enable automation, you can turn off automation. No one else can do anything with that. If the conditions are right, it'll be executed. Kind of simple as that, really. But yeah, we've got a lot of users and a lot of money that trusts SummerFi, and yeah, we only put protocols on there that we know and we trust. Sometimes it's described as an aggregator, but we kind of, in my opinion, stay away from that a little bit. Like an aggregator is the sort of place that would bring everything available on the market in one place. But yeah, we don't have that. So what we like to think is the users delegate their trust to us, and we will pay them by kind of keeping trusted protocols available on SummerFi.
Got it. Very cool. So the current landscape of DeFi, right? There's a lot of mixed opinion, like you said earlier, mixed opinions, right?
Mm-hmm.
What do you believe the current global landscape of DeFi is, and what's holding us back from achieving what's possible?
Yeah, so I mean, if we start off kind of at the second half, really, of like what's holding us back. I mean, I don't think there's a huge amount holding us back at the moment. In reality, I mean, we're still very, very early in this technology. There's a lot of value, and to be fair, still a fairly high number of like kind of, let's say, early adopter users using the technology. But that's kind of where we are still at the moment. We're still at the early adopter stage, and we're still at the development stage as well of this early technology, and so on. I think it's been super interesting at the moment to see kind of some of the more recent developments kind of in DeFi as well, particularly around kind of like the more focus on isolated markets. So kind of looking further away at the kind of like the Maker, the Aave, the compound models, where it kind of everything kind of was put into a single bucket and backed all the tokens, whether it was Maker, kind of all the varied collateral backing Dai, and all the Dai, whether it was Aave, whether it was everything that was deposited was backing everything that was borrowed in reality, and so on. So yeah, and we're going down this more like different model, trying to remove governance. I think that's been a pretty key focus more and more recently as well. Like I think the DAO kind of idea, like DAO governance, is like, it was a super interesting idea and stuff, and I still think is a really good idea personally. But we can see protocols now trying to move away from that a little bit more. Uniswap is such a great example where they just deployed Uniswap v1, v2, v3, and it just runs. Like, it's there, it runs, and there's really nothing anyone can do about it. Obviously, the likes of Maker and Aave and Compound, they've all got these big governance models behind them. They can be stopped or paused or shut down or whatever. And now you've got the kind of newer markets, the kind of Arjna's out there, the completely permissionless markets and so on, like completely governance-less. You've got the Morphos now with the Morpho Blue protocol, Metamorpho Vaults, which are like just permissionless pools effectively deployed by the vault curators and so on. But once they're deployed, they can't be changed. and so on. Like you deploy it, you assign an oracle to it, you put your parameters in, and that will live there now as kind of eternity in some ways. And this is like, I think, a really positive direction we're going in, because we haven't had the like tens of thousands of people governing a protocol correctly. We don't really have the experts. You see, I think a lot like Maker going through its endgame stuff, like constantly trying to change governance in some ways there. I think Rune recently talking about how it like the amount of like everybody shouldn't be trying to govern Maker and so on. It should just be like kind of like almost selected people or select people or like a few experts in some ways. But yeah, but I don't think that's the thing that holds us back. I think in reality, the thing that's holding us back or will hold us back until we really solve it is still the UX. DeFi is heavily fragmented. Like liquidity is all over the place. Like stale collateral effectively is just all over the place. Like you see the amount of collateral in like old versions of Compound and Aave and so on. It just isn't moving. And yeah, and that's something we're trying to solve for at Summerfy as well. It's like bring all of the top quality stuff together and make it incredibly easy eventually for users just to deposit and earn, whether that's earning through multiply trading or anything like that, or just earning through passive LP strategies and so on. But like long-term adoption is not like every like retail user like moving their positions around every couple of days, trying to get that extra 1 or 2% yield, and so on, or like having to like de-risk their position, then increase it or move it from this protocol to this protocol because the borrowing rates have shot up. Like that isn't the future, but that is kind of where we're dominated today. And hopefully at Summerfy, that's what we're solving for at the moment, and trying every day to kind of fix that problem. And eventually, yeah, I think we'll want to plug DeFi into the wider kind of Web2 world. I think we're already making advancements with that, with the wallet, kind of some of the wallet technology and so on, and some like the recent EIPs and stuff that are going through. But yeah, like now we just kind of want to see really like yeah bigger and broader adoption. I think from more and more people.
Interesting. So that seems to be a theme. You said money not moving. It's not just in the DeFi space. There's money's not moving most places, right? So there's some kind of hang up or some kind of something going on. And what is that underlying thing going on, and how do you solve it?
You solve it, I believe, through UX, and that's the thing that generally solves most industries and growth. I mean, Web 2 is a huge UX really on top of Web 1. And so when you look at fintech in the kind of 2012, 2013, 2014, you look at like things like TransferWise, like adding such a clean and slick UX layer on top of FX transfers around the world, and so on. Like generally UX, if you look back at even like the social networks and so on, UX wins 9 times out of 10. Like if you can massively improve the UX, if you can focus on UX and have a team of people focusing on the user experience, regardless of what it is, whether it's money or payments or art or NFTs or whatever. Like if the UX is makes it simple and easy, where you don't even really like have to think about what you're doing, and if in reality, if you look back and you don't even realize you were almost doing that thing, then like it makes it so much easier. I mean, if you just look at digital payments and stuff now, even with banks, like you can go out for lunch now and just one person can pay, and 5 people now can just send that person their share of the money instantly. Like you go back 20 years and so on, like you'd have all had to go to the bank, or you'd had to have the cash, or you had to have change, make a bank transfer at a kiosk in a bank and so on. Like the UX is so much smoother, so much simpler. And now, like obviously this is the first kind of like banking digital first in a sense. Like we're not just putting a digital app on top of a very old 20, 30, 40-year-old system. It's been designed and built digital first, and that creates a huge opportunity to create an even better and slicker UX. And that's even shown from the self-custody kind of side of it, where you are like you own your own money, and yeah, now we can just make that more powerful. Right now, owning your own money like that, like as a drawback to the UX. Like it's incredibly difficult with private keys and so on, but it gives us a huge opportunity to make it so much better in the future.
I agree with that. I agree with most of what you said. There's one thing that you said in the past few minutes that I don't agree with. Maybe I do. I don't know. we talked about Uniswap.
Yeah.
You said Uniswap is very good and no one can do anything about it, right? However, last week the SEC sued the Uniswap, calling security and trying to shut it down. So will the SEC be successful at that?
But
What do you think?
yeah, I mean I think it was just a Wells motives, right? To say they're gonna take action rather than actually suing them at the moment. But that's just up, I think, towards Uniswap Labs. So there is nothing the SEC can do. I mean, unless they want to take down every single ETH staker around the world, and so on. Like they cannot shut down or stop the protocol running. They can take down the interface, or force Uniswap Labs to take down the interface, for example, but they cannot take down the protocol that's running. They can't even buy all the Uni tokens to shut down the protocol because it doesn't have that option. So Uniswap protocol is going to run. It's going to run indefinitely as long as there are people staking Ethereum to verify and validate the network. The Uniswap protocol now will run indefinitely. There is no way to do that, to stop that. So yeah, I mean the SEC can take down the website. I mean, if they do, there is already hundreds of other ways you can access the Uniswap protocol today, already, and yeah, like the SEC doesn't have the power, unfortunately, fortunately probably to take down the Uniswap protocol. And yeah, it's not the protocol they're served a Wells notice to, right? It's the labs team that run the user interface on top of the protocol at the moment, which today now, several years after it's all been deployed, are two completely separate things.
Sounds good to me. They can't do anything
Yeah.
about it. I like the sound of that. So institutions, they're
Yep.
fighting like crazy to not have DeFi work. But what are the greatest benefits? So for them, what are the greatest benefits of using DeFi as rails for institutions that are going down swinging?
Yeah. So I think when we talk about institutions that don't want it, they're mainly the ones that are already controlling the kind of what's happening with the money anyway, right? So already it's the big banks and so on that are calling it out. In reality, I don't think we hear too often about the institutions that are actually holding the money and trying to earn a decent yield on it. The thing that's holding back the institutions in reality, I think, is just a very unclear kind of global regulation. There is not a single jurisdiction around the world that has a clear kind of policy on how to regulate access to any of this DeFi stuff. Really, and none of these investment funds or institutions that have got tens of millions, hundreds of millions, maybe billions of dollars that may just want to put like 1% of it through DeFi for some of the solid yields that you can earn. No risk or compliance team is going to allow that for 95% of those institutions. However, like we are perfectly set up to accept that capital, and DeFi needs capital in order to kind of run the other side of it. It relies on liquidity. It relies on LPs effectively to put that in, and they're rewarded handsomely in kind of all cases for that. So from an institution's point of view, if it can be made safe, like if they can pass their kind of checks, and some of those checks obviously they're going to be compliance checks and regulatory checks and so on, but also part of that is going to be knowing that they're not mixing funds with any dirty money and so on. Even though all we hear in the news is Bank X has been fined for like laundering money, and Bank Y has been fined for helping like another government launder money and so on. Like there's this higher expectation in some ways that if they use crypto, they want to be able to do it, knowing they're not going to mix it in with bad money. And that's also possible with the technology that we have as well and that we're building. Again, it's digital first. It's like you even look at kind of some of the privacy pool stuff like Vitalik and co have like talked about and put out there, which is like a very high confidence that there is no bad money kind of in there. But we have the technology to be able to create like these rails to say, hey, if that's what you need, we can allow and create that access for you in reality. But the biggest blocker really for that is still the extremely unclear regulations. And that isn't going to really like be solved with the likes of the kind of the bigger banks and so on constantly trying to block this innovation, because they want that liquidity at the end of the day, right? Like they don't want to give up that liquidity and that money in those funds. But yeah, I think it's inevitable at some point The question is when, and not if, really. But the technology is there for them to deploy it, manage it themselves, have more control over it than they do in any other probably kind of like white labeled management account that they have, where they're still kind of sending huge sums over the phone, and so on. The technology is there. We now just need to kind of move that little bit further forward. A little bit like companies adopting email in the early days. Like there was still a lot of faxes going around when email was 10 years old. And yeah, DeFi isn't yet 10 years old.
I remember using the fax machine at work.
Yeah.
So email became so much easier. That's right. And then the regulation goes into what you said about fragmented markets, and I can see that. Something that I want to shift gears a little bit now, towards DeFi users, right? And that includes DeFi, the regular users, which include traders or investors, right? Something I've never used because I've been a long-term holder only, and I've never been an active trader. Is this concept of stop loss, right? I want to find out why it's important to use stop loss when trading cryptocurrencies, and does that even make sense for somebody who is a long-term buy and hold only investor?
I mean, I think so. So we have stop loss on our trading strategies on summer. I'm a heavy user of stop loss. I got stop lossed out, I think Friday, when the market drops. And I spoke at length recently with one of our product managers and user researchers about literally about how we both use our automation strategies and so on. But yeah, I mean, I think things like stop loss is an incredibly powerful tool, especially when combined with some of the other kind of like automation strategies that you can have as well, such as automated take profit, on the other end as well. But yeah, I mean, even as a buy and hold, I mean, when you look back to 2021 and so on, lots of people kind of rode that wave all the way up. And then it kind of came crashing back down in 2022. The same in 2017, kind of January 2018, it then came crashing back down. And the whole hodl thing was there. But in reality, when you try and take the emotion out, I'm not selling, sort of thing. I'm a believer in this. I'm a holder in this. But in reality, you could have stop lost out at maybe 3,000 or so. It fell all the way back down to say 1,000 at some point, I think in the midst of the FTX, so on. And then it started raising. Now, even if you didn't have the confidence to buy, because I think it's very difficult to kind of buy at 1,000, although everyone says I stacked my bags up further at the all-time lows or whatever, or the kind of lows of 22. It's actually very difficult to do it or to catch that bottom. At what point do you catch the falling knife? I remember 2017 or 2018 in particular, the buy the dip was buy the dip was everyone Reddit or Twitter and so on. Everyone was just talking about buying the dip, and it just kept going down, right? It's so hard to catch that falling knife. But let's say it then went up to 1,500 again, and that it was that kind of trending toward in 23. It was it felt flat, but it was slowly trending up. If you'd have stop lost out to say USD or USD stable coin like Dai or USDC or something at say 3K or even 2.5K, and you bought back in at 1.5K, you're winning at that point, right? You stopped your losses. Let's say it went all the way down to $200. In reality, nobody really knew how low it was going to go or how long it was going to go low. But if you get stopped out, then particularly if at that point, let's say you bought in at 1,500 and you get stopped out at 3,000 because it went up to 3,500, you're stopping out in profit. And that is such the important thing there. If you want to buy back in, you can buy in. And in fact, you can then buy in again at 1,500. Maybe it goes back up to where it is today at it's hovering around 3,000, I think. But now you've pretty much probably doubled your stack at that point, because you kind of took the emotion, you took the emotion out of it in some ways to say, I'm just a holder. I'm never selling. I'm just holding. But emotion gets in the way of the head a lot, and things like stop loss help take the emotion out of it. If you set your price, set your level, I personally probably have my stop loss set way too conservatively. It's always I think I've been stop loss 3 times this year already, because like I always had the paranoia of losing too much. So I often have the stop loss set around like between 5 and 10% lower than where it currently is, if I'm using summer and using the multiply features and so on. And that means like, yeah, when there's a big dip on Friday, I get stopped out and it gets stopped out to die. But for example, I've already bought back in, but I've got more ETH now from when I got stopped out on Friday because I bought back in at a lower price because the price did keep falling. It fell even further on Saturday. So I'm now in a position where I've got more ETH than I did do on Friday when I got stopped out. But had Saturday gone like worse and it would have fallen another 20 or 30%, I'd have still just been in dollars. Again at that point, and that's the power of stop loss. And the reverse of that is the power of take profit as well, which is again available on Summerfy, where you can set the price you want to start taking profit, and it will just slowly withdraw collateral from your wallet at regular set intervals that you choose. And it can take it out either as collateral if you don't want the exposure to the market. Let's say you're at 2.5 or 3x, and you want to take collateral out and kind of put it back at 1x, basically. Or more importantly, at least from my perspective, it can take it out in dollars. And if you're at, say, a 2.5x multiple exposure in say ETH, the price only has to go up 40% for you to have 100% of your principal back in your wallet while still having the same dollar amount exposed to the market the whole time. So like, and again, we saw in 21, loads and loads of people like rode that wave up massively. Very few like took out anything in that time and actually ended up with less in 22 and starting 23 than they bought in at 21. But if you had a stop loss or you had to take profit, one, you'd have taken profits out, and then once that market started to dip, you'd have closed with a profit as well. And then when the market started recovering again, it's super hard to really know when the market's recovering, but it gives you the opportunity to buy back in at that point, and you can still be a long-term holder. Like in that regard, right? You can still be a user of Ethereum, you can still be a user of DeFi and crypto, like, but like you're kind of like, okay, the market's dropping. There's no rational reason to keep holding on to this asset. Like if I don't need to, and that's reality, right? You don't need to hold on to it. And yeah, like the smartest money is not holding it all the way down, ultimately, right? The ones that are kind of causing it to go down. And with like things like automated stop loss and so on, like you can take that emotion out of it in some ways. Like, oh, I'm sure it's going to go back up. Like just set the tools where you're comfortable with. Even like trailing stop loss, like we've got, right? Like the market goes up and up and up and up. If it has a little dip, it gets you out. Maybe it carries on going up a little bit further and you lose some potential gains. Like that's hard and that's annoying. But actually, if it was to drop 25 or 30%, then you're smiling. At that point, and you can still have the entire intention of coming back in, or you can go and deposit that Dai or USDC or USD backed like stablecoin. Like you can go and deposit that somewhere else into DeFi, and like on Summer you can earn around 10% on that. So you can still use DeFi, you can still be supporting the ecosystem. You can support the ecosystem without just holding ETH or Bitcoin or whatever. And there's other opportunities out there for when the market's going in the wrong direction. Basically.
Very good. So I remember I was part of that wave in 2021 that rode everything up, and then part of that wave that came crashing down, yeah. And there are a couple during that time, there were a couple unnatural movements, like a 60% drop a couple times, that really a lot of people out. Now, if I'm a user, I want to use Summerfy, and I'm not an experienced DeFi user, although I have DeFi cryptos, right? And I want to use a stop loss, and I want to take profit, and I want to use your platform. How can I do that? And how is the user experience set up so it makes it simple, like for somebody like me who's never done those two things before? How can we do that?
Yeah. So, I mean, if you just head to Summerfy, depending on what your use case is, you're presented with a table, the easiest case where you're asked if you want to borrow, multiply, or earn. Borrow and multiply are very similar products. Multiply just uses the borrowed funds to instantly buy more of the collateral asset and deposit into your vault. So you can go from 1x to 3x in one transaction, for example. borrow is ultimately the way to do it manually, or if you want to get liquidity from somewhere else, or you want to do a basis trade or something like that. So let's say you want to borrow, you've got a ton of ETH, you want to borrow Dai against that ETH, and you want to swap that Dai to like USDE, and you want to stake that for SUSDE and earn the kind of like whatever it is, the 15, 20, 30% funding rates and so on that's on that at the moment. So you would do that through borrow. Borrow and multiply both have trailing stop losses as well, available on Aave and Spark. We've got both of those going live very soon on Morpho, Blue as well. We've got ordinary stop loss available on Maker. But again, if you come to the Sumify interface, you choose borrow or multiply, and you will see the different automations available for the different tokens that can be supported as collateral. They're also available on Aave. On Aave on L2s as well. So if you don't want to pay the insane gas fees at times on Ethereum layer 1, you can Optimism, Arbiter, and Base. They're all available on there as well. But yeah, once you've opened that position, you'll be prompted to add a stop loss, and then you can choose between a kind of regular stop loss, which is fixed at like you choose the LTV to close that again, or the trailing stop loss, where you choose the kind of drop amount. So if the price is going up and up and up, and you set $100. At any point, if it then drops $100 to the max price it's hit, it will then just stop you out regardless. And you can choose to collateral or to the debt token. So often the debt tokens are USDC or DAI or USDT. But yeah, it is incredibly simple. It shows you all the numbers you need to see. It shows you LTVs. It shows you kind of the dynamic price. And the reason it's a dynamic price, particularly for the ordinary stop loss, is that you can go and adjust your position constantly. And if you adjust your position, that adjusts the stop loss price as well on there, because the stop losses are set like a loan to value. Because this isn't just holding assets on Sumify, you're actually kind of getting either increased exposure or borrowing against them. But yeah, it's incredibly easy. Our earn products don't have stop loss. There's kind of no need for the stop losses on the earn products. But yeah, it works great on borrow and multiply.
Great. Awesome. I'm going to check it out. I'm going to try it out. And I'm not going to put all my money there to start off. I'm going to learn. And I recommend people do that first, right? So the everyday person, right? How can the everyday person, become a DeFi superhero? What must they know? How can they do that?
Yeah, so at the moment, yeah, I mean, probably the easiest thing for an everyday person to do is just earn. Like everyone likes to earn on their assets. Through Sumify, we have a number of different options on the earn tab, depending if you're holding ETH. Like if you don't want to be doing the whole trading and so on, there's a number of different options of ETH, whether you just want to lend ETH in a very simple kind of liquidity pool, whether it's on Argent or Morpho or something like that. Or we've got some slightly more advanced ones with in reality fairly low risk, but there is still risk there, and that's things like the ETH yield loop. So at the moment, you can earn about 3.5% if you were to liquid stake your ETH through someone like Lido or Rocket Pool. But actually, you can earn around 12% at the moment if you want to yield loop that on something like Aave or Morpho or Spark, where you can get like maybe 10x exposure to the staked yield at the moment, which is kind of then like netted out against the borrow rate of ETH. But at the moment, I think kind of currently this week, it's kind of averaging around 12%. I think the 90-day yield is around 8% or 9%. I think so. They're solid returns. But for the everyday user that's just holding their assets, it doesn't understand the concepts of kind of like price impact or slippage, or how to calculate the kind of the borrow rates against the yield rates and so on. Earn is the simplest and easiest way to get started. And yeah, by the end of this quarter as well, we've got some big plans to make saving even simpler and even easier for the ordinary user and the users coming into DeFi for the very first time. So yeah, stay tuned for that. There's some really exciting things happening on that side, kind of launching on summer in the summer.
I love it. I love it. And then since we're talking about summer, talking about I want to talk about DeFi summer. Yep. I love the first one, and I'm like, when's the next one coming?
Yeah. Well, I mean, it's the impossible question, right? But let's hope. I mean, the markets have been pretty volatile this year. We had a nice little kind of run up at the end of last year. And I mean, it was summer in the southern hemisphere, right? When it started. So it's always summer somewhere, pretty much. But yeah, I mean, who knows where the markets are kind of going to go. That's the kind of impossibility. That's why we have the tools on our summer that we do. Whether it's the market's going down or whether they're going up or whether they're going sideways, there's the tools are on summer to help you like kind of make the most of your money in the safest possible way on there. But yeah, we're all hoping for another DeFi summer this year. Yeah, and yeah, Northern Hemisphere summertime, hopefully, right? Hopefully we don't have to wait until the end of the year again for any more things. But I think it's going to be bumpy. There's some really cool stuff being built. There's some constantly new things. Hopefully we see far fewer like kind of scams and so on. Unfortunately, that's just part of the industry that we're in. But yeah, we'll see how it goes, right?
I'm hoping. So,
Yeah.
I want to thank you very much for your time today. I really enjoyed speaking with you, and it's been a great conversation. And I do have one final question, and it's simple. It's how can people find out more information about you, about Summerfly? How can they become customer or clients or use your platform? How can they do that?
Yeah, I think just head to summer.fi. Yeah, that is the easiest way. Everything you need to know is on there. Through onboarding, there's like link offs to the knowledge base and so on, helping you do whatever it is you're trying to do. Yeah, if you've got questions, either hit us up on Twitter or our Discord. All the links on the summer.fi website. And yeah, if you head to Discord, I'm there in the public Discord channels regularly, either helping users out, answering questions, yeah, or just speculating wrongly normally on the price rising or falling. So yeah, but summer.fi is the main place you'll find everything you need to get started. And yeah, we're always very grateful for feedback. So yeah, drop anything in the feedback channels that you have, and anything that's not there that you want, just let us know.
Awesome. Thank you very much for your time today.
Cool. No, thank you. It's been a real pleasure.